Hey, what's up, all my Topo Chico fanatics out there? This is Mike Mills with Verity Mortgage coming to you today again with more mortgage knowledge to widen your brain. Different loan programs are available to different people, and one of the loan programs that gets used on quite a regular basis is what's called an FHA loan. And I want to explain just some basic nuts and bolts of what an FHA loan is so you can better understand it. So what exactly is an FHA loan? Well, when I bring up FHA loans, a lot of people think that it's a government loan, a loan issued by the government. But again, that's not really the case because governments aren't banks and they don't issue loans. But what governments do, and in this case HUD, Housing and Urban Development, this is a department of the federal government, will insure this FHA loan to the bank. So what that means is that if you can't pay your mortgage or don't pay your mortgage and you default, the bank has an insurance policy that allows for us to open up more looser guidelines, looser restrictions to allow more access to home loans. Because as the bank, we know we've got Big Brother or the government behind us insuring this loan.
It's going to be just fine.
So if your credit isn't the best or you have some particular issues or circumstances that don't fit into the box of what a normal conventional loan, then FHA might be a route for you. So what are some of the positives to an FHA loan? Well, they have a lower down payment. The minimum requirement for an FHA is 3.5% down. They also allow for lower credit scores. So if you've had some issues in the past with your credit or your credit hasn't quite improved to a certain level, then you can still possibly get an FHA loan. Most banks allow FHA loans down to 580, 590, 600, something like that. But at the end of the day, if you have lower credit scores, FHA might be an opportunity for you as well. They also allow for higher debt to income, which that basically means that if you make a little less money and have a little higher debt, you might still be able to afford that home that you want because FHA allows you to go a little bit higher than maybe you would on your standard conventional loan. Also, if you've had major derogatory issues in the past, bankruptcies, foreclosures, any significant credit issues that have occurred in your past, FHA has a shorter allowance time to make it able for you to buy a house should you choose to. In other words, you don't have to wait as long as if you've had foreclosures or bankruptcy issues in the past. FHA allows for shorter time periods to be able to get that home that you want. So does that mean FHA is the perfect loan for you? Well, you got to understand there's a few drawbacks, right? With good stuff comes the bad stuff. The bad stuff is that with an FHA loan, even if you put down 20%, you would still have to carry that thing that we all hate called mortgage insurance. But you would have to carry it for at least 11 years. If you put down the minimum, however, which is 3.5%, that mortgage insurance lasts for the entirety of the loan. So the only way that you can get rid of it is to either sell the house or refinance into a different style of loan. Another drawback is you do have the mortgage insurance premium, and it's going to be a little bit more expensive depending on your situation than maybe a standard conventional or VA loan. So your mortgage insurance premium might be a little bit higher, and you also have to pay something called upfront mortgage insurance. Now, this doesn't come out of pocket. In other words, you don't have to bring this money at closing, but this is something that's added to your loan. This is a way that FHA or HUD continues to make money so they can insure these loans against default. So that opens up more opportunities for home ownership for everybody. So it's just a way that they collect money in order for them to keep moving along and insuring these loans. But that upfront mortgage insurance premium, you really don't feel it because again, it's added onto your loan, your payment increases slightly, but ultimately it's paid off when you either sell the house or refinance. So the bottom line is this: if your credit situation isn't perfect, if you don't have a ton of money down, if you've had some issues in the past, an FHA loan might be something that fits for you. All I can tell you is reach out to a local lender, tell them about your situation, and see what they can help you with. Are there some drawbacks to it? For sure, but it might be the loan that helps you get on your way to home ownership, building wealth, building equity, and getting out of the rent race. Again, Mike Mills with Verity Mortgage. Please forward and share this video. Give me any comments, any questions. Happy to answer however I can. Be great humans, and we'll see you soon.